Hello, homeowner heroes, and welcome back to the Stop the Foreclosure podcast and YouTube channels. So, yes, we're going to talk about loan modifications today, which is one of the longest chapters of the book, and it has probably some of the best information around on loan modifications and some ideas. So, I've got 3 different case studies in this chapter. Just the people were really amazing to share their stories with me. They're kind of all a little bit different and unique. And just goes to basically the fortitude that these people had to get their loan modification done. I mean, just so proud of them in that aspect for sticking with it and figuring out the process, and just so grateful that they're willing to share their stories with me so that I can pass them on to you, and that we can create a great loan modification course, which is free and available on stoptheforeclosure.expert, not .com, but .expert. And yes, so here we go. So Bob W., homeowner and loan modification success. He talks about loan modification. It's a game, a financial and legal. Whoever plays the game best gets paid the most. So here's what I'm going to say. If I had to face foreclosure again, because I did go through it personally, it's why I'm motivated to help you all and to give out free guidance and education and support you all. So I personally believe that I would start with the loan modification almost 100% of the time. I mean, there's almost no reason not to. One is because it kind of puts the foreclosure process on hold. Okay, yes, you are still building up fees and all that stuff, but at least it gives you a little more time to come up with a solution, maybe to get the loan reinstated, or get you could dual track in terms of a loan modification and a repayment plan possibly. So, and look, if you are successful in the loan modification, then it does lower the interest rate on the loan, and you get to stay in the house, or maybe you get to work with a financial, a compassionate investor, make more money. There's lots of good things about it. It does take time. It does take energy. You have to be dedicated to it. It's going to be frustrating at times. I don't think they've made it ever super easy, and the rules kind of change every once in a while. So I did try and put them in this chapter. It's blog 7 on the stoptheforeclosure.expert website. If I miss anything, I would go ahead and read through the chapter a few times because there's a lot in it. But here we go. Okay. So, just make sure that if you are approved with the loan modification, that it will work for you in the long run. You really don't want to set out on doing all this work and not make the payments and then be in the same situation again. Okay. Also, a lot of the loan modifications that I was aware of, they only lasted for 5 years. So they lowered the interest rate to a very, very low amount for 5 years and then bumped it back up again. And I think that a lot of people had a hard time adjusting to the bump up again. So if that is the case, make sure you mark your calendar, it's coming, and that you're ready for it, that maybe you got some cash saved up to get over that hump. So if you are not approved, you may qualify for cash for keys in a short sale or deed in lieu of foreclosure. So they may give you some other options, and it's just worth finding out what's available to you. So let's just talk about the definition. A loan modification is where the loan is changed by lowering the interest rate on the loan. The length of the loan may be extended, or the mortgage balance is reduced or added to the end of the mortgage. Kind of like a forbearance is a kind of a type of a loan modification. And that's actually the next chapter in the book. It'll be the next video series or podcast. So individual banks really have their own program, okay? And then also, if you have a VA loan versus an FHA loan versus a jumbo loan, like there's different rules that way too. So you really need to get a hold of the bank to find, or the bank or the servicer to find out what's available to you. Like I said, this option may let you save the property, which I hope it does. It may make the monthly payments more affordable, either for a while or hopefully permanently. If you're really diligent about being permanent, that's the best way to go, in my opinion. However, it can also potentially make it so you cannot sell your property for a long time. So that might be a downside. In the past, modifying the loan took a lot of work and persistence. Luckily, the rules have changed. The paperwork is becoming a lot less than it used to be, or non-existent, depending on how late you are with your mortgage, apparently. It is best for people who still have an income, because not everyone qualifies for the loan modification, they really do want to see that you can make the payments, okay? And if you have a need to stay in the property, like just if you really are fighting to stay in the property and it's really important to your family, then that might be a good thing. So, like I said, loan modification sometimes only lowers the payment for 5 years, and then you got to be prepared for it to go back up again, okay? You'll have to reach out to it's called the loss mitigation department for your lender or servicer. They're the ones that typically handle the loan modification. Okay, usually you'll have to submit a hardship letter and a loan modification application. You can do research on Google, like what is a hardship letter, and the loan modification application is going to be specific to your lender. So you'll just want to, and here's the secret. Okay, here's an insider secret for you. Insider secret to keeping your home. You will want to ask them about their standard operating procedures. Okay, if if you really want to be successful, you may want to know the policies and procedures better than the employees at the bank do. Okay, this, I promise you, will give you leverage. Joy, was this phenomenal mom of two autistic children, and she fought and fought and fought to stay in her house because of how important it was to the children that they weren't disrupted, that was their place. And she cracked the code by asking what their standard operating procedures were. And every time well, I'll go into more detail later on her story, but it is the keys to the kingdom is to know what the standard operating procedures are for your bank and servicer. Okay. Get as much information as you can about the program and the process to know exactly what is required and when. Because really only 20 to 40, it was really only 20% of the loan modifications were approved in the past, even if you follow all the rules and the timelines. Okay, so you always have to make sure that your paperwork got received, that if you are making a payment, it got received to the right department. Like, you really have to follow up every step of the way with loan modification. Also, here's another insider tip. Ask for a single point of contact for all your documentation and payments. Lenders lost a lot of the paperwork by having borrowers basically sending documents to different departments. The lenders like to switch your point of contact because they don't really want the bank employee to get too emotionally attached to the homeowner. I mean, Joy was a master at that because she would enroll, she would she'd convert the employee at the bank to feel sorry for her, and they'd start bending the rules, and then they would kind of figure this out, and they'd switch her to a new department, they'd switch her to a new building, a new location around the U.S., and she always fought to go back to the bank employees that gave her the best treatment. So you really want to make sure that you try and have a single point of contact for everything, and it's the same person, because really you don't want to be going back and explaining your situation over and over again. You want someone that understands it, that gets you, that is on the same page as you. Okay. Yeah, like I said, Joy always demanded she work with the same person. Even though they tried to move her 4 times, she would talk to the manager. And honestly, she got her loan modification done because she knew the bank system and processes and paperwork better than they did. Honestly, she just outgained them. She outworked them and she outgained them. And it was just awesome to hear how she did it. So Joy is definitely one of my heroes when it comes to loan modifications. So, typically in the past, some of the banks or servicers would say stop making payments for several months before applying for the loan modification. And this is, the danger is that it hurts your credit score, which hurts your ability to get the loan modification. So really, you want to start the loan modification without having, like, if you're missing a payment or two, then I would start it immediately. I'd just say, look, what are the rules? What's possible? Let's start this sooner than later. And the new program, or relatively new, is called the Flex Modification Program, and it should eliminate this problem in the future. And I'll go into some more detail about the Flex Modification Program. But get your loan modification started as soon as possible. Don't tell them that you need to be late by 90, 120 days. Like, just don't accept that. Is my that's what I would tell myself. Okay, so I also talk about Dion Z's story because it shows that she took the route of going through the foreclosure attorney to get her loan modification. The bank wouldn't talk to her. The servicers really wouldn't talk to her. But she called every day to the attorney to make it happen. Okay, she didn't stop. She didn't give up. She was determined to save her house. So the standard way may not always be the way. You may just have to go to the local attorney or trustee that is handling the foreclosure and talk to them and get them engaged and enrolled in helping you save your home. Okay. Also, it's important to note that once you've entered the program, it's technically illegal for the banks to foreclose on the property. In the past, it was called a dual track. Okay, where you would start your loan modification and the bank had already started the foreclosure and it was a race to the end. And sometimes the bank won and got and foreclosed on the property. There was one case that I know, so sad, that the loan modification got approved after the bank had foreclosed on the property. Like, they called her up to congratulate her and she's like, well, this doesn't do me any good because you've already foreclosed on the property. And there's a sad story. So the Consumer Financial Protection Bureau back in 2014 said, look, they will strictly limit the ability of mortgage servicers to foreclose on a borrower while negotiating a loan modification. So you just want to note that on January 10th, 2014, the Consumer Financial Protection Bureau ruled that it will strictly limit it. So if you can find that rule, you might want to submit that if they look like they are still trying to foreclose on you while you are getting a loan modification. Look, the loan modification can also buy you time if you're facing foreclosure to give you a chance to get the loan reinstated. For example, I knew one attorney that basically had won a big case and he put everything into this case and his home payments had fallen behind. And he had a big payout coming to him, so he'd get everything caught up and what have you. So that does happen. Like, they're just salespeople out there and attorneys that we get big chunks of money at times and they're able to get caught up. So, but the loan modification might be a way for you just to have a little more time to get that all done if you're willing to do the work. Okay. So yeah, don't let them dual track you. Don't let them foreclose on you while you're getting your loan modification. That is not legal per the Consumer Financial Protection Bureau. Okay. Let's see. It's also prudent to act as soon as possible because in some cases, the completed loss mitigation application, so the loan modification, actually must be submitted 37 days before the foreclosure sale date. Okay. So, like in states like Georgia and Texas, it can be almost too late because 28, they'll give you the notice of default and then you'll have a bit of time, typically a few months, and then they'll do the 28 days in Georgia where they post it in the newspaper, in the legal, Oregon it's called, in the legal newspaper, and then you got 28 days to foreclosure. Well, you've got 37, you have to submit all the paperwork 37 days before the foreclosure sale date, so, or at least the application. So my suggestion is, as soon as you can, file for the loan modification. Even if you're just starting to be late, like you're 1 month late, I'd call up the loss mitigation department and say, hey, how soon can I start a loan modification? Okay, like, know what the deal is. Don't be afraid to ask. I mean, that's what they're there for, and start figuring out and knowing more than they do, because it will help you in the long run. Okay, so here are a couple stories of homeowners who got loan modifications. So Bob W., I talked about him. The first loan modification was attempted by Bob's wife. It took approximately 6 months, like for most first-time homeowners, and they were turned down for no reason. And it did wipe her out emotionally. She was, pretty distraught about it because putting together all the required documents and getting the bank on time is no easy task. Banks hide behind incomplete paperwork and timelines so they don't have to give you a loan modification. And I really think that they were actually making way more money on the foreclosures than they were on the loan modifications. It's just a guess of mine just on how they acted. And I do know that back in the day, they were given $900 for every loan modification folder that was started, or application that was started. So they had incentives basically just to look at it and then put it away and then get another $900 and start over again. So it was horrifying. The second loan modification attempt for Bob W. was with a bankruptcy attorney. The attorney charged him $500 and got nowhere with the bank. However, the bankruptcy attorney said the ratios of income to debt should have worked. And this was when the idea came to Bob that a Chapter 7 bankruptcy would help him qualify for the loan modification. But this is one of the rare cases, I would say, that a bankruptcy is productive if it's really, really important that you keep the home. Okay. I do go into bankruptcy late in another chapter, and we'll go into some of the pitfalls and traps that you have to look out for. So, when the last rounds of foreclosure were underway and there were no other options, Bob filed for a Chapter 7 bankruptcy to wipe away his unsecured debts. So, credit cards, anything that wasn't secured by real property, either the house or the car loans and stuff like that. So, like the credit cards, the personal line of credits, those sort of things. He basically was trying to get those off of his credit report so that he'd have the right ratios of income to debt. The bankruptcy did stop the foreclosure and gave him a little bit of breathing room. And what was interesting is that Bob actually asked the property to be included in the discharge from the foreclosure, from the bankruptcy. In almost all cases, the bank will ask for the bankruptcy judge to pull the house out of the bankruptcy so they can continue on with their foreclosure. Bankruptcy really, I'm going to give you a little bit of preview. Bankruptcy typically only stops foreclosures for a few months. It doesn't stop it as long as people would like it to. And there are risks inside of bankruptcy, such as your house can be bought by somebody else and taken from you inside bankruptcy. There's just a myriad of things. So in this case, instead of the bank asking for the property to remove from bankruptcy, Bob did. Bob was like, I want the property moved out and I want all of my non-secured loans discharged so that I can actually get a loan modification done because I will have all the right ratios. So Bob calls the bankruptcy process a tool to be used against those that entrapped you. The bankruptcy did cost him around $4,000 and had to be paid in full before the discharge of the bankruptcy. So it's not a cheap route to go. Bob did have to pony up money. And I will also say this about bankruptcy too, is that technically you cannot use bankruptcy to delay, hinder, or defraud the bank. So in this case, I don't think he was trying to do that. He was actually trying to work with his own debts and the bank such that he could actually save the home and not really delay or hinder or defraud the banks. So yes, just be aware that you are actually violating federal law if you use bankruptcy to delay, hinder, or defraud. Okay, so the third and final attempt of the loan modification, as soon as the bankruptcy court discharged the debt and it pulled the property out of bankruptcy, okay? Since he got rid of a substantial amount of unsecured debt, his income to debt ratios worked, and now for the bank's loan modification criteria. He immediately resubmitted the paperwork and started calling every week, sometimes as often as every 3 days, to check on the status of his loan modification, depending where he was in the process. Bob started making the loan modifications directly to the assigned bank representative to make sure they weren't mysteriously lost and not able to be applied to the correct account, which has happened many times back in the day. So he's really careful with where he was sending the money, who he's sending to, and then following up with them. He noticed that he never got to directly talk to his bank's assigned representative when he called, okay? They would sometimes call him back within 24 hours as promised and sometimes not call at all. It could have been that the assigned representatives were often had quit or been reassigned, because he counted a total of 5 people assigned to him during this process. All right. And when they wouldn't call him back directly, he would take the first live representative that he could talk to, and he called them the second string bank representatives, which kind of cracks me up, honestly. He goes, this is because everything is time sensitive. Every bit of paperwork had to be filled out completely and accurately. And Bob was on a mission to get the completed package as fast as possible in front of the mortgage committee to be reviewed. Okay. He also realized that collecting evidence could be used in court if he ever had to do a wrongful lawsuit if he didn't win the loan, if he didn't get approved for the loan modification. So he took thorough notes every time he talked to the bank. The notes contained the day and the time and who he spoke to and what was said. All right. And the next call revealed the loan modification had not gone to the committee as he'd been told it had. And he uttered the words, well, this will look good in my notes for my attorney. Meaning these are the kind of mistakes precisely why people didn't get approved and could be potentially a court case if it was wrongfully foreclosed upon. So Bob was either determined to get a great loan modification or have a legal case for suing the bank for misrepresentation. If not for his persistence and attention to detail, the loan modification surely would have been shot down again. Another interesting twist is that the second mortgage kept demanding payments while Bob was in his 90-day uh, awaiting approval cycle. So he quietly insisted that until the first mortgage was settled, they weren't going to get anything. The strategy paid off, and the second mortgage agreed to a loan modification as well. So you got 2 for 1. So pretty impressive. Bob credits the good timing and the push from the federal government for loans to be modified. His advice is that the homeowners need to be on top of every step and not think that all of the and to think that all they've done the necessary work and then have the bank drop it. So you got to really just stay on top of things over and over again. Make sure that the paperwork is filled out completely and accurately and on time, and then make sure it gets to the right hands at the bank. Okay. What ended up, Bob, was lower payments through a lower interest rate. All the late payments were tacked onto the back end of the by a forbearance, and there was no mortgage reduction. Okay. Luckily, his income did improve. We like to hear that, to make the current payments, and he's one of the most determined guys I've ever met. So I know he'll make it. So I think there are some lessons we learned from Bob's success. First is that in his case, a Chapter 7 bankruptcy worked to get his income to debt ratio correct for loan modification. Second, pulling the property out of bankruptcy, typically done by the banks, was an awesome maneuver, and I thought it was bold and insightful to do so. Third, being meticulous in his paperwork and getting it on time is super, super important. Okay, having it, like I said, accurate and complete and fill it out on time. Fourth, calling the bank every 3 days, maybe what it takes to make sure your loan modification makes it through the loan committee on time, complete for review, and hopefully for approval. So, what I didn't care for the solution was the possible future costs for Bob. Yes, he has a house for himself and for the 2 daughters and a healthy newborn baby, grandbaby. But he did sacrifice his retirement savings, and that may force him to work the rest of his life for much longer than he anticipated. In addition, that he may find himself stuck in a property that will be upside down for a long time. So remember when I talked about that it may force you to stay in a house you don't want to be in because it's upside down, but you can't do a short sale at that point. You'd actually have to bring cash to the table to get it to close if it's still upside down. Okay, and hopefully that's not too common right now, but it may be common again if the market does go down. So the next is Dion Z. So Dion was able to keep her townhouse through her tenacity and unwavering commitment to keep her monthly payments low. She started with a $600 a month payment and got it reduced to $394 a month for the first 5 years of payment. However, her mortgage balance will increase $15,000 because of the missed payment and penalties. So it's no free ride. Okay, she was paying $600 a month. She's now going to pay $394, which is a nice reduction. But that money that she's not paying every month is going to be tacked on to the end. Okay, she does plan on staying on the property for many, many years, so she's willing to ride that out. But just know that it could keep her in the property longer than she wants if something else was to come up. She initially stopped the foreclosure with a qualified written request, QWR, back in 2011. You may hear that along the way. I have not seen that work in a long time. Okay, it was something pretty cool back in the day, but banks pretty much just ignore it now, or at least they did from 2011 to 2016. During the first attempt, the bank rejected her application because of her credit score. The only payment that she was late on was her mortgage payment, she pointed out. She goes, the bank said I had to take a late payment to apply for a loan modification, quote, and then which impacted her credit score, which means that she got rejected flat out first time around. So the irony is just not lost, and just bad advice from the bank and bad procedure. So, by the way, after you are 90 days late, your credit score looks as if you'd already been foreclosed upon. So it's really no difference after 90 days. Your credit score is going to be impacted the same, apparently. Once she got past that hurdle, she went on to have a 3-month trial period. And at the end of the trial period, the bank attempted another foreclosure. So she did the 3 months, and then they went and said, no, we're going to foreclose anyway. During the pre-foreclosure, she called the bank's attorney every day. Now, she is also another one that is relentless and will not give up. The conversation will last between 30 minutes to 2 hours every day. She would speak to whomever she could get to listen to her story inside the legal office. It was only after many weeks of calling that she finally got an advocate in the attorney's office. Within 3 days, she had her loan modification reinstated with her bank and got approved within 3 months in the Home Affordable Modification Program, the HAMP program back in the day. So Dion is living in a very expensive place to live that'll absorb, like they'll have to absorb the $15,000 increase in her mortgage. Maybe that's not a big deal if it's been appreciating for a while and she could sell it with no problems. But it is one of those catches that may have kept her in the property a little bit longer than she wanted. I just hope that she's happy. She did, like she really, and just worth it for her when the market fully recovers. So, look, the loan modification process can be time consuming while you're managing to generate the income to pay for a new mortgage payment when and if you're approved. It does take real work and dedication, as seen from the two stories. Bob and Dion spent many hours on the phone and kept taking notes religiously and had to fill out all the documents on time and correctly. Make sure that your lender sends you the final loan modification signed by them. Okay, sign it and keep a copy for yourself. You may want to review it every year to see if the payments may be increasing over time. And this way you can prepare your budget in that case. There was one troubling, well, not one, but a troubling story about how Bank of America decided to deal with upset homeowners in loan modifications. They actually hired a subcontractor called Urban Lending Solutions of Broomfield, Colorado, to act as if it was the office of Brian T. Moynihan, the Chief Operating Officer of Bank of America. Homeowners thought that they were making progress in their loan modification, but according to the lawsuit filed in the U.S. District Court, the letters were never opened and homeowners and documents were never scanned into the Urban Lending Solutions computer systems. This triggered defaults in all of the loan modification process and resulted in foreclosures that probably should have never happened had people had the opportunity to actually fill out the paperwork for a loan modification. The lesson here is that you must stay on top of your loan modification with the bank or the servicer. Like I said, you can't really let even 3 days go by without knowing exactly what's going on. So another issue is the banks. This irritates me immensely as well. The banks are reporting to the borrowers late to the credit bureaus, even though they'd been making all of the modifications payments on time and in full. So they had an agreement with the bank to basically get caught up or trial period. And the banks would say, no, you're making the payment. Like Dion's was $394 versus $600. She'd be making those payments, but the banks would still consider it short of what was due and call it late. So, just killing people's credit scores, which is just a real shame. So, one thing that you might be able to do is to write into the loan modification is for them to remove the foreclosure and report you on time when you make your payments as scheduled. So, like, you can ask for whatever you want inside the loan modification. You may not get it, but go ahead and ask for it. And that's a huge one if you can get the late payments knocked off your report. Okay. Each bank and regulatory agencies such as FHA, Fannie Mae, Freddie Mac, Veterans Affairs, USDA loans all have different guidelines, okay, for modifications. So you just need to attempt to understand which set of guidelines that you need to get your modification done and follow those rules. Just because someone else says something, they may have a completely different set of rules because of the different mortgage that they have. So, once again, if you may want to file a complaint with the Consumer Financial Credit Bureau if the loan modifications aren't being taken up in a timely manner. And if they're around, taking advantage of them and go from there. Okay, so an update. So there's actually a new foreclosure prevention program called Flex Modification, and it was to be fully implemented by October 1st, 2017. So I'm taping this in June of 2025. So this will actually be fully implemented 7 years in October of 2025. The Flex Modification Program is designed to prevent as many homeowners as possible from foreclosure for loans owed or guaranteed by Fannie Mae or Freddie Mac. All homeowners who are delinquent are eligible for the program. It is designed to offer monthly payment reduction of up to 20% and allows forbearance of principal. Honestly, if you can get the Flex Modification program, you can get a reduction in interest rates. You can get a reduction of monthly payments, and forbearance allows for forbearance of the principal. Actually, a decrease of the principal, even better. Okay, so Fantastic. This means that even though your loan payments will be lower a portion, so I guess they don't really lower the balance, right? In the flex modification program, I'd always push for that. I'd always say, look, the new market value is this. Therefore, you need to get rid of some of my loan. Like, that's always the best, but if you can't, they'll do forbearance, which just pushes it on to the end. So it'll be suspended, basically. So you also may get forgiveness. That would be awesome. So you may hear terms like the principal forbearance to an 80% market to loan value. This does not necessarily mean that your loan will be forgiven. It just means that you won't be paying the 20% until the very end of the loan, which could also be a balloon payment as well. All right, so just keep an eye on your loan modification. Keep an eye on what they're really pushing for. Try and understand as best you can. Get an attorney to look it over, or maybe a law student or somebody to read the contract for you if you are not clear about it. Ideally, you do want your principal forgiven if possible. Okay, loan forgiveness truly offers the amount that you owe on the loans, and don't be afraid to ask for it. So they have been done in the past. I don't know what they're doing currently. The homeowners that are less than 90 days late must submit a borrower response package called a BRP and go through the full loss mitigation process. The BRP is significantly less paperwork than the previous HAMP and loss mitigation application. So they've shortened the process, which is really great. All right, this package will include an eligible hardship and verifiable income. The loan must have been created within 12 months before the application. So you just can't get a loan, stop paying on it, and then turn around to get a modification. Yeah, that wouldn't work. Okay. After 90 days late, a no borrower documentation is needed that the servicer is not required to confirm the homeowner's hardship or income. I do recommend that you plan to make payments, and if you're not able to make the payments, you may eliminate any future chances of being modified if you do not follow through with this program. So there are some exceptions. FHA, VA, USD loans are not entitled for the flex modification program. Also, if you have been approved for a short sale or deed in lieu, you'll not be eligible for this as well. So check out all the requirements to make sure that you qualify. One last note is that you may give up any rights to sue when you do a loan modification. They'll actually just say, nope, you can't even do that as well. So, look, they're just trying to make sure that none of their past mistakes come back to haunt them with future lawsuits. This may mean that they might be motivated to do the loan modification, which may be good in your situation if they can eliminate any future lawsuits. So you can check out the www.makinghomeaffordable.gov website for the latest information on HARP, HAFA, and the Flex loan modification programs. Another place to get help is state programs. Unfortunately, a lot of the state programs are running out of money, but if the economy worsens again, state programs may be funded once more. So check online and see what's available for you in your state in the future or currently. So, insider secret. Understand every step and deadline for your loan modification. Understand their procedures and policy better than they do. Also, be prepared to fight the bank to get your loan modification. Document every call you make and every piece of mail or piece of information you send in via mail, fax, email. Lastly, prepare the future mortgage payment schedule that may show up in several years from now. Like, just start building that in now. Many people end up back in foreclosure because they could not handle the increase in payments. Please don't let this happen to you. All right, my homeowner heroes, I know this was a bit long. It's a lot of information to go over. The most important thing really is just know what's required and when it's required, and how to make sure to stay on top that it's going to the right people and going to the right place, and you're making forward on your loan modification. Yes, so you are my homeowner heroes. Take good care of yourselves. If you want a free homeowner review, please go on the website on stoptheforeclosure.expert and sign up for that. That's a 30-minute basically conversation about what the 14 different steps you can take in foreclosure while being a homeowner, and then you get to choose which one's best for you, but we can explain the pros and cons of each one. There's also a loan modification course there, so that would be great if you want to get a free loan modification course. So perfect for this chapter. Thank you for joining me today. Also, if you want to support the channel, if and when you ever decide to sell your house, even if you are able to save it today in a loan modification or in the immediate future, and you do want to sell it at some point, please come back to us so we can get you a great real estate agent. It doesn't cost you anything, and it'll help keep this program going. So, okay, thank you again, and be well, take care, and see you on the next one.